On the 25th. Let's get started. Sorry if you hear some snoring in the background. That is my dog right in my face. Let's get into the risk disclaimer. Risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading stocks, options, futures, forex, cryptos, you know the deal. Just getting signed into the YouTube channel. Make sure everything's coming through loud and clear. If you're out there, type in wire yes if you can hear me. Yes, yes, yes. All right, Donna, right off of Flex into the channel. Tom, good morning. Greg, good morning. Nice to see everybody. Let's get into the charts. Pre-market, everything's down. Futures pointed into the red. Here is the SPY on the 4-hour. Last couple days have been pretty much awful. Since we had a little rally on Wednesday, Thursday, Friday were terrible, and this is what it looks like. So the SPY, Thursday, Friday last week just got smoked to the downside. Pre-market's also lower. What we're going to be looking for this week. Number one, we have major earnings lined up. So here's a look at that. So some notables. Activision, Coca-Cola, General Electric, Microsoft, Alpha. I mean, honestly, all these are notable. These are all pretty big companies, fairly diversified as far as different sectors. We have some tech. We have actually big tech earnings. PayPal's an interesting one. Pinterest, which has been beat down like crazy. Spotify, Twitter, which has made all sorts of headlines recently with Elon Musk. Apple, of course, a big one. Amazon, Intel, ExxonMobil, so get some energy. Chevron, get some pharmaceuticals in there. So this is a pretty massive week to wrap up the month. We will officially wrap up April's trading on Friday the 29th. We have some major expirations this week as well. I'm going to be reviewing that today with my Equities on Demand students. And this week I am off to Florida for a live event Tuesday, Wednesday, Thursday. So I'll be doing my best to track everything, monitor everything, and making sure we're closing up shop with hopefully some nice profits this week. So look at the technicals. Are we heading down according to this potential straight line that I can't draw? Give me a second. I don't know why that keeps happening, but let me bring up the tool again. All right, let me bring up my little drawing tool. There it is. See if it'll let me draw the lines that I want to draw. Like so. Resistance, and you stretch this out to support. Is this where we're going? Right? Are we going to continue to flush to the downside where we have this high, low, lower high, lower low? Now, where does that put us from a percentage basis? From high to low, this is right before we had that Ukraine invasion. That was 14.5%. If we make a new low based on this symmetry, that's going to put us very close to that 20% correction area on the SPY. Again, do I think we're going to get there necessarily? I don't know. It's going to be crazy. Like this low might be the low, right? We might come down and revisit the same level. We might have to rally off of that. And I keep mentioning the similarities of 2015 and 16. When it took until around 2016 when the markets were reassured that China was interested in supporting the markets. The U.S. of course is interested in supporting the markets, but I think the U.S. is possibly the wild card because the Fed is raising rates. They're going through a tightening cycle, which was not the same case back in 2015-16 to be as aggressive as it is now, right? I mean, Janet Yellen, when she came in as Fed chair, was looking to raise rates over a 4-year period. But the markets went sideways. And so from 2015 sideways, 2016 sideways, then finally had a breakout into late 2016 and never would look back until, 2020 high. So I am wondering when this, Russia-Ukraine low was put in, if that's still going to be a testing point where the market finds it, bottoms off of that 14-50% area, and we see some pretty dramatic buying. Now, the timing of it is something I'm also considering because this week is wrapping up the month of April. So do we just have like purging and cleansing and deleveraging in April, and then everything that's on sale and beat up starts to get bought in May? Maybe, right? Maybe May is the nice recovery month as we head into summer and try to make everybody feel good and forget about the markets for a few months. And then we'll deal with it in the fall. We'll deal with it in September. I'm not sure. Okay. So what is interesting with earnings this week, because there are so many massive companies, So financials certainly didn't lead off the earnings season with a good nudge because every financial stock was essentially saying revenues down, revenues down. These companies here, if they can notch Q1 earnings that are positive, it might help stabilize the recent hemorrhaging. All right. So, I mean, Coca-Cola, consumer defensive, longtime Buffett stock, General Electric, all over the place. Microsoft, possibly one of the best inflation stocks. Alphabet, same thing. Even though so much of the portfolio, like just all the money out there, like 20 some percent of the S&P 500 is sitting in those FANG stocks, right? It's not Facebook anymore, it's Meta. But there's a lot of money in Meta, which has earnings this week. Apple, Microsoft, Netflix, which probably still has a ton, but there might be also a big drop in the positioning of Netflix because of how hard it got hit. It's down over 60% now, I believe, after just losing 200,000 subscribers for the first time in a decade. And it's like, oh, you guys don't exist anymore. It's like Netflix just got crushed. So anyway, there's a lot of concentration in these particular stocks. So a lot of the earnings coming out this week, we will reflect that and see where is big money going. Is it going to stay in these companies? I mean, the flows in ARK investment still keeps coming. Cathie Wood stock is down 60 plus %. ARK is getting crushed, and yet billions of dollars keep flowing into it. Buy the dip, I guess. Apple, Amazon. I mean, you're talking about your big four. This is really the week that the market might actually be saved by its biggest stocks, its highest market cap, highest concentrated stocks. Microsoft and Apple. Okay, or I'm sorry, Microsoft and Google, and then Facebook and Apple, Amazon. So your FANG stocks right here. I know that Meta is now, it's no longer FANG Man, but these are the big ones this week. So Tuesday, Wednesday, Thursday, along with everything else. If the overall earnings are fairly positive, the market might do anything it can to look at this as like, okay, things are okay, and we might start to stabilize. But we could be pushing lower today into these, Ukraine, Russia invasion lows, and have that sideways move where the market starts buying the dip later on. So look, I'm very curious. Like everyone, come back on Friday and see where we're at. I mean, I think there's a couple things that happen. One is we hold this low, we have this high, and we know that we're dealing with sideways potential support resistance. Okay, with a lot of volatility. The other is that this is corrective. Okay, and we're not going to break those highs anytime soon. And you make this a parallel channel, and we are just gunning for those fresh lows. There's still an opportunity to buy the dip, and we might have a corrective channel coming this way. But usually bear markets are faster, more aggressive, and more relentless to the downside. So even though this has been a really ugly slide the last 48 hours, today doesn't look like it's going to get any better. So, this is why, and the side, this is why I keep playing volatility. This is why the VIXI, I am long, which is up quite a bit. Off the lows here around $14, this thing's up $4. That's a big move on the VIXI. And hopefully we'll see. If it's going to get nasty out there, then this thing has room to get up to this yearly pivot. On the VIXM, VIXM, this thing's at 33.85. I am wondering, I have this covered call all the way out to June, which is really stupid of me, actually. I might end up just taking the loss on the covered call. If we end up skyrocketing up here above $35, $36, I might just eat the covered call and just take my profit on my position since I own the thing at $27.95. So I am at least hedged against some of the scariness in the stock market with some of those volatility plays. Also, while be positioned in value and consumer defensives. But it's going to be a huge earnings week. Okay. All right. Yeah, Ruth Ann, I'd love to see you there this week. That'd be awesome. Okay. Yeah, let us know. I mean, if you're in Tampa, you're what, about an hour and a half away? Yeah, if you can make it. Okay, so let's take a look. Pre-market, everything looks like we're a little bit lower. It's going to be 20 minutes or so before the market opens. SPY, pre-market down. DIA pre-market down, and again, we have these awful slides from last week. Thursday, Friday last week were really bad. Q, same thing. The Q's on, I mean, just tech remains like very difficult. Such high concentration. It's just growth is not good. Tech is not good right now. Maybe the staples, right? Like large tech, but I also feel like a lot of the earnings have been kind of priced in, like all the big market caps. Apple, Microsoft, it's probably a good place to hide out. I keep saying that if you want to see safe haven, If you want to see the stock market really start to topple out, then watch Apple. If Apple starts to break these lows around 150 and starts to break that structure, then look out below. Because if Apple is going to break and keep falling aggressively, the entire stock market is going with it. That means Amazon would break lower, probably Google would break lower. Everything's going to get really ugly if these, the Fang Man stocks start to give up all these gains. It's literally like 25% of the stock market all tied up in like 8 stocks. So that is not a good thing. Like that has created this decade-long house of cards. So traders need to be aware of that. There's better places to put money, especially if these start to break down. But again, earnings on companies like this are probably going to be fine. I mean, I don't know if they're creating super aggressive, like awesomely optimistic forecasts, or if they're like, yeah, we met expectations, and maybe that's all the market needs. But if we have major misses, which I don't know. I mean, Facebook missed and they've been beat up, but Google's been clinging, right? Look at Google. I mean, we broken some recent structure here on Google. Okay, so are we pulling back into some more realistic levels, but also attractive levels? Sure. I mean, I look at Google as this low from COVID to this recent high. We're starting to break this structure. I mean, we're pulling back into like the 382, the 50. I mean, all these levels, in my opinion, are really attractive buy levels. We have a massive gap in here around 2000. I mean, you have to remember there's a split coming in Google this summer in July. So even if the stock price is down, I would buy more Google at $2,000 and get a 20 for 1 this summer. That's what I'm going to do. So I will still dollar cost average into Google. Okay, Amazon, same thing. We're going to be having a split this summer as well. Amazon, which hasn't broken recent lows, but we have earnings on it this week. So if Amazon taps this chart alarm around 2,700, goes any lower, that's another 20 for 1 this summer. So we could have some, again, interested buyers. That's all I'm saying. Money's going somewhere, and this large concentration in these select stocks is probably not going to change anytime soon. Okay, but it's going to be a big earnings week. But like I said, if you want to watch and see, if the safety of the stock market is going to be questioned, then watch Apple. Because if Apple breaks these lows at 150, I think everything is vulnerable to the downside. And it's going to get a lot worse and a lot more painful. There's going to be a lot more red. Before we get the open today, I want to see what we had on Friday. It was another sell-off day. So we had around 62, this is crazy, 6,250 stocks. So about 73.5% of stocks were below their 200 simple moving average last week. That's a lot. That is a lot. So we clearly have a lot of bearish posturing in the market right now. So is it this week that can kind of turn the corner? Are we going to be saved once again by Fangman stocks? I don't think so necessarily. But again, this is what ugly markets can look like. It might be about weathering the storm as opposed to carving out massive gains. It might be about lowering your costs in your holdings versus seeing new profits. I know we do a lot of credit spreads and equities on demand. Last week, I didn't take any ownership. I took a loss on Ford. We're still looking to repair some trades and add some new covered calls, which I'll be doing today in class at 10 o'clock. So this week with all the earnings, maybe we have a bullish week, or maybe it's, rights the ship and stabilizes. But again, I'm going to be watching from my phone, checking aftermarket to make sure that, I'm keeping track of everything. All right, let's keep going. So I want to talk cryptos for a moment. I did add to my Bitcoin position this morning. Bitcoin's trading at 38.7, and I did throw a couple more bucks into Bitcoin right around that same level, 38.7. I think I got filled at 38.9, and I'm just going to wait. I'm still going to watch 35,000, 30,000. If we come down to these lows, we had lows all the way here. The lows of this year, I believe, were at 33,000. So, if this channel low holds, then we rally off of that and we continue to stay in this sideways consolidation. We may also make it a little bit trickier. The structure might come down here for a bear trap and we start testing these lows. I'm interested in this being a buy opportunity between 35 and 30,000 and then creating that bottoming pattern. Okay, so if we have like a bullish head and shoulders or a bullish crown pattern, I'm interested in this, being a reason that I can add some more in dollar cost averaging on my major levels and then look at a transition where we have this big rally, we buy the dip, and we run after some new highs, and we see if Bitcoin does, double by the end of the year. If we go to 35, we end up at 70 plus. I mean, I don't know any other asset class that can have that potential this year. I'm not saying it's going to happen. I'd love for it to happen. I think everybody else would too. But it's one of those instruments where if everything happening in the stock market, the bond market, tightening, dollar, inflation, real estate, everything, and all of a sudden you can have this noticeable kind of uncoupling from risk on, risk off. I mean, yes, I understand that the stock market sliding is risk off. That is weighing on crypto. Okay. But if people are asking for more crypto exposure and more money is being put into Bitcoin, even if this is a range, and we have buyers down here that are interested and there's enough to take it back up to highs, there is no other instrument right now that would perform as well as that right there. To have a 2x return or better this year amongst all the other nonsense going on, I don't know if anything else has that type of opportunity. Now again, maybe it doesn't happen. Maybe we don't have a bullish move at all. But from what I see structure-wise, it's going to be really interesting. I'm certainly worth, it's worth taking the chance to me. So I'm still dollar cost averaging into Bitcoin, Ethereum off these channel lows and support. Dollar index, we talked about this morning in Flex, a little bonus session. DXY and dollar index, watching both of them really carefully. So look at the weekly time frame. The US dollar and the dollar index heading towards multi-year highs. Now there's a couple of really important spots to watch. 103. Okay, so number one, we're over 100 now, but 103 to these highs. This goes back to 2017, highs again in 2020. If this level holds, then we're looking at multi-year resistance on the dollar index, hitting a top, and then starting to sell back off to the midpoint or possibly coming all the way back down to range lows. All right, now that is if we start to see the signs of end of the month, we start to see some resistance points, we start to see some bearish price action to support to complement the resistance we see on I don't want to get the terms confused, to complement the resistance that we see on the charts. All right, there is a potential concern, and that is this. I don't think that the Fed wants to have a stronger dollar. All right, I will say this. If the dollar gets this much stronger, that's going to be horrible for the stock market, more than likely. If I were a guessing individual or a betting individual, I would bet that the Fed would rather see the stock market stay stable and bullish than see the dollar strengthen by another, whatever this is percentage-wise. Let's look at the numbers. If the dollar were to strengthen by this much, that would be another 15 to 16%. Let's say it's 1-to-1. Let's say for every percent the dollar strengthened, the stock market weakened. Do you think that the Fed wants to have a 15% decline in the stock market in addition to the extra 14, 15% they've already dropped? Probably not. So I'm not saying there's going to be guaranteed manipulation here, but I think that this resistance, this is why I think it holds. This resistance holds and the dollar weakens and the stock market can stabilize and we can have a rally before we go into summer trading. That's what I think. Now, it could be this week, like 11th hour, the final, big push of earnings season into massive tech, high concentrated stocks, Fangman, let's save the day. You have to realize that the stock market across the board has pretty much been riding the coattails of Fangman for the last 10 years. And they have completely outperformed the market to a very disproportionate concentration. So I don't think the stock market wants to weaken as the dollar gets stronger. I don't think the Fed wants to see that happen. All right, I'm not saying it can't, but it's like the dollar is strengthening kind of to the chagrin of the Fed. The Fed has had this very difficult challenge of raising rates, tightening, weaning the markets off of stimulus and accommodative monetary policy, but also trying to keep everything stable and liquid and prevent the chaos and calamity from hitting the markets too badly. All right. So I don't know. There's just a lot of stuff that feels like it's riding on this week. Earnings is a big part of it. The sentiment's a big part of it. We've had such strong bearish sentiment. I think I showed this in Equities on Demand last week. But it was like we have some of the highest levels of bearish sentiment ever. And usually that is when you get those extreme cases of bearish sentiment, it usually doesn't mean more bearishness. It usually means that the smarter money, the bigger money is looking to level in, buy some dips. I just think that the play right now is not necessarily buying dips on tech unless it's short term. If you're buying discounted tech stocks, that's great, but it's short term. I would not be looking to hold anything past. And here's a good example. If you look at ARK, Okay, here's ARK. So right here. So we're trading at 52.10. Okay. So if ARK shows any sign of recovery, and by recovery I mean like back to like $90. That's it. If we go from this area, we start to stabilize. Okay, we have some volatility in here. Maybe we even create a channel or a falling wedge, and we have a recovery. I think that would be a great lift for technology. That would bring the broader market into green. Everyone would feel happy and high fives across the board. But it's a recovery. It's not new highs. I think we are years away. All right, I mean this plural, years. We're years away from hitting new highs in ARK. We're years away from hitting new highs in Netflix, in Facebook, like years away. So it is about recoveries and maybe a broad market lift. Remember, this is what was celebrated a couple weeks ago. Oh, remember that post-Fed rally for 15%, whatever it was, and the ARK was up 30%. Wow, look at that. Well, it's right back where it started. I mean, so this will probably rally stronger and faster than any stock market recovery, index recovery, but it's still just a recovery. I could see ARK pulling back to $90 to $100. I'm in ARK with a break even at 76. If I get to $90 to $100, I'm taking every bit of that profit. I don't care if ARK, goes back to 160. If it goes back to 100 and falls bearish again, then I'll buy it lower. But all I'm looking for is tech recovery in the short term, not full on dump your money into tech, because we're not in that environment. Rates going up is not conducive for growth at all, and it's going to make it very difficult for tech. Okay, I'm interested in like stability, low volatility. AT&T off that crazy drop. They also had the split off of Warner Brothers Discovery. AT&T sitting at 1948. So I'm long in this one. Verizon has some opportunities as well. They also dropped on earnings, but they're recovering nicely off these range levels. I'm trying to buy Verizon here between 48 and 45. So I like lower volatility for right now. I like some boring stocks, and I like some dividend stocks to try to just hold things tight and not see a lot of P&L drawdowns. But I'm taking nibbles on stuff that's on sale. Okay, if FANGs rally, will that settle volatility? Yeah, it's possible. I mean, the VIX, for example, has been up quite a bit since last week. So the last 48 hours, again, we're 5 minutes away from the open. The VIX has rallied really aggressively off the lows. The VIXI is off the lows. The VIXM is off the lows. And it looks like this may continue until the market's kind of digesting earnings in the middle of this week. So the meat of this week, take a look. I mean, Monday, like fairly light before market opens. I know that this is just notables. There's like 50 plus stocks reporting earnings today, but the meat is Tuesday to Thursday. I mean, you've got Microsoft and Google reporting after market open. So like you're going to have all day trading tomorrow, and then you have a lot of after market close on Tuesday. So coming into Wednesday's trading, again, these are all aftermarket. See the AMC, that's aftermarket close. So Wednesday's trading day is going to be able to digest Microsoft and Apple and Visa. All right. So Wednesday to Thursday, I think, is where most of this is being digested by the market. Because if Microsoft comes in, thumbs up. If Google comes in, thumbs up. That could certainly help stabilize. If Facebook follows, PayPal maybe follows. Pinterest, I'd love to see a recovery in Pinterest. I'd love it. Apple and Amazon aftermarket close on Thursday. So I think there's just a lot riding on earnings this week. But even if it's crappy, if somehow they all miss and the market drops, I'm still long volatility. So even though I would be sitting on some drawdowns, I'm still going to make some pretty good profits on volatility if it's bad. And of course, this week we can talk about some bear call spreads if we want to trade some directions. We can also talk about playing some earnings and just do some simple, like we can go long call and sell. It'd be this. We can do long call if we want to go up on the stock. We can do long put if we want to go short on the stock. But I would also spread it based on a daily trading range or an average trading range for the week, because we can try to lower the cost of our debit. So we might do some debit spreads this week. I don't know if I'm going to or not. I don't really want to shell it out and have like all this riding on earnings. But I think it's interesting to see where the whole market goes. Okay, FUTU, I haven't seen this one. Holdings at 30. Let's see. So do you want to go short on this one, Daniel? Add to Sheeb. Okay, wow. Oh man. Well, for the fact that you're holding Sheeb, that's a lot of Sheeb, man. I mean, look, I hope it goes nuts, right? I hope this somehow finds a way to muster the 200 to 300% returns. That'd be freaking sweet. I'm not in Shiba. I'm not in Doge. We'll find out. FUTU, I'm not in anything here. I can look at it. Wealth management services. Okay. I'm going to see what Micron's doing this week. We're at 68.39. Micron could be potential assignment this week. Break-even ownership. If we take assignment below $70, it'd be 68.10. Again, the market might have some strong support here as well. There's room for this to fall a little bit into the mid to low 60s. This isn't a bad stock. This is semiconductors. Again, there's shortages. This should be something that stays fairly high in price. But NVIDIA is also quite a bit off the lows, or quite a bit off the highs. NVIDIA still in this correction area, maybe falling back into the 150 to 160 zone. OKTA, this is a stock I've been watching for a while. We're at 134.50. Coinbase has had some fresh lows, which has been a little bothersome. We're at 130 now in Coinbase. Ugh. So, and what is interesting me on Coinbase is watching. Let's say that we get a rally on Bitcoin, right? Let's say we get a big rally on Bitcoin. Well, is this going to put in a bottom as well? And Coinbase actually has a decent rally off that, maybe. The other one that I'm watching, we have some interest in this one. This is MARA. This is a Bitcoin mining firm in North America. We have some ownership here at 22.75. It's also a pretty volatile stock. We collect some good premiums on it. I'm going to look this week and see, maybe we can play some calls and get some premiums for it, even if we just lower the cost a little bit over the next couple of weeks. What was the other one I was thinking of? GBTC is trading. That's that spot ETF, GBTC Grayscale. We're trading at 27.41. I own some Grayscale around 24.61. Chart alarms, MU crossing 69, SLV crossing recent lows. All right, so Wall Street's open. Things are pointing lower, futures down. I'm going to get a bunch of chart alarms coming in here. 27.63 lows, bear call. Yep. CLF. Sweet. All right. I'm just going to let these chart alarms keep filling up because there are probably a ton of them. CLF 27.59. I'm going to see if I can get out of this bear call spread. I'm in like 5 contract bear call spread if I can close this thing out. Sorry. I don't. Can anybody hear those alerts going off, or is it just me? Hopefully it's just me. It's super annoying. But I'm going to get logged in here. All right. Okay, just getting logged in. I want to check on that bear call spread. I know the expiration was out to May, so it may not be. I'm not looking for profit on it necessarily because I'm not going to wait as long as I have to. But if I can get that thing closed out for break even or better, that would be pretty solid. It's $2 and change below my strike price. So let me check on this really quickly. Bear call spread on CLF. There it is. So here's my 30. All right. So I just need more. Yep. All right. I don't know. I might have to wait a little bit longer. And it's not the end of the world. I mean, I made some good profits on CLF. I just had to spread it so I can close it and then get back in with bull put spreads, which I'm in for quite a few. So 5.6 bull put spread, 5.20 bull put spread. I'm in this bear call spread through the 20th as well, and trying to get this thing to break even or better. But I just probably have too much time in it right now. Anywho, chart alarms keep filling up. FTGC. All right, let me take a screenshot of this. This is all stuff we're gonna have to discuss in EOD today. It's gonna be a busy session. Checking some chart alarms, making sure we don't lose track of our 29th expirations. All right. Let's see. You hear it? Okay. Well, hopefully it's not super loud. It is distracting because it's in my ears. SLV, Micron, BKR, CLF, CTRA, CTRA. So we lost this stock at $28, and now we have a bull put spread we can start looking to manage as well. I'm happy that we flipped this. We flipped for like $6 a share. We're trying to hopefully see some love on SLB. SLB is at 38.69. I'd like to see if we can lose this one towards the highs. We're gonna have to add some covered calls this week. So, all right, that's fine. Let's take a look at the currency strength chart this morning. Japanese yen creeping up there. It's another kind of risk on, risk off day in Forex. So risk off, you have the dollar, the Swiss, the yen on top. You have the Aussie, the pound, and baseline, you have the New Zealand and the CAD. So the Aussie's taken the battering today. The pound is also pretty soft. But again, safe haven's pretty obvious. JPY on top, which is a good thing. I told traders this morning in the Flex bonus session that we do have a BOJ. It's I think it's a rate decision, but they always do it like in a weird way. So we have the outlook report, the monetary policy statement, and the BOJ press conference on Wednesday and Thursday. If I go to all news, not just the medium and high impact, but if I go all news, we should see a BOJ rate decision. Yeah, so we have the outlook report, the policy statement, the BOJ rate right here at negative 0.10. That's probably going to stay unchanged. The press conference. What we've seen the last 6 or 7 weeks on Japanese yen pairs, I'm very curious to see where we are on these JPY pairs going into that meeting. If we are looking at JPYs that have had a nice little correction and we head into this BOJ report, that could be a little pop that lifts us back up, right? In a way, I hope that the BOJ says something the market doesn't love and it just keeps unraveling and we just have safe haven trading. Again, this is just for Forex. I mean, the weird thing for me the last couple of months is I've had great weeks in stocks and mediocre weeks in currencies. And then I've had great weeks in currencies and mediocre to terrible weeks in stocks. So it has been like one asset class that I'm trading has been helping me make money while I ride things out in the others. That's what's been a little wild and crazy. So anyway, that's the stuff we've got to navigate. All right. No, I did not, Daniel. I didn't take a look at that. Sorry. I mean, honestly, I'll try to look at it this week, probably from the hotel, but it's just going to be a busy week. Sorry, I didn't have a chance to look at it. I was also running tests all weekend on the Pockets Pattern Pro. I ran 211 simulations, had it all ready, tried to export it, and then I got an error. It was like last night at like 11:30 p.m. because I was going to carry that over in today's class at 1 o'clock. So I'll have to run those tests again. I got a glance at everything, but I just at a glance couldn't tell, like, is it better on the 15, 30, 1 hour, 4 hour. So I'll have to run those tests again this week. But anyway, all right. I'm good. I'm gonna try to get my my stuff in order here for the day. I've got another class coming up at 10, class again at 1, have some meetings, and then it's time to travel. But I'll be back on Friday for another YouTube session to wrap things up. I can't emphasize enough how important this week is going to be in the markets as far as stocks and sentiment and earnings. Huge week. As far as currencies, we don't have a ton of news, but we have enough to pay attention to. We have enough riding on the Japanese yen. We have Aussie CPI that comes out. I think will be pretty important to watch. The BOJ is going to be super important to watch. We have GDP and unemployment claims for the U.S. as well. The DXY, the dollar index, the Japanese yen, safe haven versus risk off trading. We have to wait. I mean, it's going to be one of those weeks where you want to watch your risk on, risk off. You want to watch your volatility. Keep an eye on your earnings reports. Okay. And then we'll see what the markets end up doing. I mean, if the stock market starts to get lifted up, that's a good thing. That's putting some recoveries in play. That's putting volatility probably back down. And we're going to look to see if maybe we can wrap up the month on a positive note, carry that momentum into May, and then the market can have a nice little, breath of fresh air going into May, forget about it for a few months in summer, and then just survive August, September as we head into midterm elections in the U.S. So it might be one of those deals. But again, I want to watch crypto too, because I did buy some more Bitcoin this morning. I'm still dollar cost averaging to Bitcoin. I think it looks pretty promising for Bitcoin to also represent It's not just crypto, but it's also representing Web 3.0. It's representing blockchain technology. It's representing that potential decoupling from your traditional 60/40 portfolio. Bond market is uninvestable. Compounding losses at, single digit percentages with losing like crazy to inflation. I mean, fixed income investors are just getting killed right now. So bonds are tough. Real estate is potentially peaked or plateaued. I think there's like, I mean, there's still builders, but when the average 30-year mortgage is now 5%, I mean, that is definitely going to start squeezing some interested buyers out of the market. People are thinking again of like, oh, I could build more, build a house that I want and move out of the city or whatever for 2.5, 3% interest. Well, now it's 5% plus. It's a big difference. So a lot riding on it. That's all I'm saying. All right, but I'll be back Friday 9 o'clock for the YouTube channel. Everyone that's in my classes, Equity is on Demand, we have class today. No classes Tuesday, Wednesday, Thursday. Flex Traders, no classes Tuesday, Wednesday, Thursday. Be video updates, Telegram updates. I'll be tracking stuff. It might be after market hours. It might be, whenever I can get a chance to get on the computer and track things. But it's going to be a fun week in Orlando. It'll be a fun week for the live event. It'd be nice to see some students the first time in 2 years since I've been back to the MTI office. So looking forward to it. Okay. But yeah, I appreciate if you're watching the video, watching this live, or checking it out. Hit that thumbs up button for me. Support the channel. It goes a long way to support. I'm curious where we're at. Where are we at for subscribers? 4.88. Let's get to 5. This started from scratch last year, so let's get to 5. Let's have some fun. Spread the word. Okay. And we'll be back for a poll report Friday. Yeah. Have a good week. All right. Keep an eye out for those Telegram updates, video updates, and let's make sure that we know our expirations, set lots of chart alarms, know where things are at. I'll probably do a lot of trade on my phone this week. Watch your volatility. Watch. So it's Watchdog Week. Big earnings. Fang Man stocks. Let's go. Okay. All right, everybody. Talk to you soon. Thanks. Bye.